Good afternoon, grade 12 learners. My name is Mr. Simbi, and welcome again to another accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Sabono Discovery Center. It is a lovely thing that I get to have you in my class today as we continue. It's been a long break. Yes, it's been about 2 or so weeks without us having class, and I'm happy to have you again in my class. Remember, we have the June exam that is just around the corner. So it is very important that we get to push quite some content because we have to be prepared for paper one as well as paper two. So we're still in paper one and we're busy with the cash flow statement. So in today's class, I'm going to focus on the cash flow statement, and I'll also look at the calculation of financial indicators. So I'll not do any interpretation. I'll just do calculations of certain financial indicators. Very important that when I do these calculations, you do it together with me so that it does make sense. In the previous lesson that we did before we went for the first term break, I touched on the cash flow statement and I did the format of the cash flow statement. If you remember, on the format of the cash flow statement, we then realized that we have three parts to the cash flow statement, which is your or I and the F, which is your OIF. All right, your operating activities, your investing activities, as well as your financing activities. And then we also have the net change in cash and cash equivalents, which is very important that you do understand how to get these figures here. We also established that in your operating activities, you have four aspects that you get here. That is your cash generated from operations. And we did a note to the cash flow statement. You remember that note when we would speak about cash inflows, cash outflows, when you look at the increase or decrease of inventory, increase or decrease of trade debtors, as well as trade and other payables. So we did do that one. And then we also spoke about the other three being outflows. So these are the three will always be outflows because you can see with the word paid, paid, paid. So it is your interest paid, dividends paid, and your income tax paid. And then you come to your cash effects on investing activities. With this one, you will have four aspects, but normally the examiner will test only on three aspects, as you can see here. Your fixed assets, we have the two aspects, which is the purchase of fixed assets, as well as the disposal of fixed assets, the proceeds from the sale. So your purchase will definitely be an outflow because we are acquiring new assets. So it will be a cash outflow. But when we dispose an asset, we are now selling a fixed asset, it will be a cash inflow because we have sold an asset and cash is flowing in. And then we have an increase or a decrease in fixed deposits, whereby a decrease in fixed deposits will be an inflow. This shows that our investments, our fixed deposit, have decreased, so they've matured, and we receive the cash as cash inflow. And when you come to our financing activities, you also have four aspects, but typically the examiners will bring three aspects of these. And then they'll talk about the proceeds from shares. So remember, we're talking about financing activities, and there are two sources of finance that we see in companies. It is own finance, all right, our own finance, which is through the issue of shares. So when we talk about own finance, we're talking shares. Then we also have our borrowed finance. On the borrowed finance, we're talking loans in that case. So we come here, then we now say, from the shares we can issue, that would be your inflow, as you see here. And we repurchase shares. When we buy back shares, we are talking about a cash outflow. And then your loans, where there's a change in loans, an increase in loans means we've received a new loan, so it's an inflow. And the opposite is therefore true, that when the loan decreases, it shows that we have paid back a loan and it is a cash outflow like this. And then we come to the net change in cash and cash equivalents. So what I want us to do is to do this one in an activity so that we can calculate certain figures. What do I need you to have? There is a worksheet that was distributed early this morning. Please do ask your teacher. They must be having this worksheet. Just ask them, where is the worksheet that Mr. Simbi is talking about? And then once you get it, then you can print it out and then we work from there. But in the event that you don't have it, we can still work without having the worksheet. So you just have to listen and watch the calculations that I do. but you need to have your calculator because I'll need you to do certain calculations for me, and I'll need you to give me certain figures that I'll be calculating together with you. If you're ready, then let us go to the first activity. The first activity for the day is from the Limpopo Prelim for the year 2023. Limpopo Prelim for the year 2023. There we go. It reads, Blade Marinate Limited. The information relates to the financial year ended 28 February for the year 2023 and complete the cash flow statement for the year ended 28 February 2023. Okay, so that is what we're required to do to complete the cash flow statement. So you will find that certain figures have already been put in for us. So we are just going to complete certain parts that have not yet been completed. But in order for us to do that, you need to have your calculators, as I've said, and you need to have the worksheet. That makes it very easy if you have the worksheet printed out already. Okay, so let us begin. So we're going to begin off with our cash generated from operations. Remember, for this, you need to do the note. You need to do the note. But in today's class, we're not going to do that note. Hence, we have our 1,685,500 already put in for us. We are not going to do the note. Okay, so the next thing that we're going to do is to record my interest paid. Already I can see, once I see the word paid, I can put in my bracket already before I calculate or I determine which amount is to be recorded. Because whenever we have paid, it is a cash outflow. A payment is a cash outflow. So cash is going out. And when cash is going out, it's an outflow. I must show it with brackets. So I'm coming here and I'm going to say my interest expense, that is 91,500. So I'll come here, then I'll say in brackets, 91,500, like that. That is my interest paid. That one was very easy, not much of a challenge. It is simply to understand that the same interest that you find in the extract to the statement of comprehensive income is the same interest that you're going to use down here. So there wasn't much of a challenge in doing that part. Let's go to the next part then. In here, we are now calculating our taxation paid. So again, from the word paid, before I forget, I'm going to put in my bracket. There it is. I know that whatever figure I'm going to put in, it's going to be a cash outflow because taxation is paid. Cash is going out, paid. Okay? And then I now need to do my calculations. It becomes very easy. I know there are several ways in which we calculate our taxation paid, but I'm going to do a T account in today's class. So I'm going to come here and I'm going to call this my taxation account. Here is my taxation account, like that. And then I come now, 2022, and I look. In 2022, what balance was my SARS income tax? I know that this side is my debit and that side is my credit, okay? And then I say my SARS income tax, what balance is it in 2022? Is it debit or it's credit? You can see here, it is credit. So I'm going to come here and I'm going to say balance brought down. And my balance brought down there is 34,000. 34,000. That is my balance brought down on taxation, 34,000. And then I will now say, what is my balance at the end of the year, which is this one here, 2023, and the balance is debit. I know that once they say debit, they're talking about under the double lines here. So I have my lines, I have my double lines. Under the double lines, that's where I have my balance brought down. And my balance brought down is 9,000. 9,000 like that. But for it to be brought down here, I understand that it has to be balanced, carried down up there, which is 9,000 like that. Okay, so I have my balances put in already. Very important that you practice on these. More practice brings, make it easy for you when you are in the exam. If you know how to do this type of a T account, knowing how to put your balance on the credit side and then the other balance on the debit side, which is under the double lines, it makes it very easy. You can do that in very, very few seconds. And then, so these balances can change. It can be on the debit, it can be on the credit. If you check my previous class, you will see that we had different balances in that case. Then when I come here, I'll now calculate my income tax. So here I'm going to come and I'm going to say I need my income tax. All right. For my income tax, I was told that taxation is 30% of net profit. Taxation is 30% of net profit. But here I'm given net profit before tax. And I know that net profit before tax is 100. And therefore here my net profit, my taxation is 30% of the net profit. So what I want is that 30. I want that 30, and what I have is 100. Then I multiply that by 1,586,000. 1,586,000. Let's see if we can bring our adding machine. There it is. So what we want is, we want 30 over 100. And then we multiply this by 1,586,000. 1,586,000. And then that will give us 475,800. That will give us 475,800. That is my income tax. So I'll come here, my income tax is 475,800. And what I need to get now is my total here, because at the end of the day, I need to get bank here. I need to get bank. So I'm going to come on my calculator. I'm now saying my 34,000, which is my balance at the beginning. I'm going to add my 475,000 like that. And then I'm going to add my 9,000 like that. And then that is going to give me 518,000. All right. Did I punch it? I left that 800 there. Let's do it again. Remember, that one is 475,800. That is 475,800 there. So that's going to give me 518,800. So here it becomes 518,800. So here it becomes 518,800. So I'll come here, my bank is 518,800. So when I come here, I can do this calculation on the side on my answer sheet, okay, or at the bottom, wherever I find space. And then I can come here and then I can open brackets the same. And then I'll say the calculation that I've done is I've said 34,000, which is this one here now. Then I said plus 475,000 plus 475,000, which is 475,800. That's 475,800. Someone says, Mr. Simbi, you keep forgetting the 800. So it's 475,800 plus the 9,000. Then I close the bracket. That is going to give me 518,800. 518,800 there. And then that is how I get my taxation paid. So the T account makes it easy for you to know what goes to which side. Which one am I supposed to add? Which one am I supposed to subtract? Because most of you make a mistake, end up subtracting the wrong amount. In this case, you were adding everything. So that is why you see that here we have plus 475 plus 9,000. We are left with one more calculation, that is for dividends. All right, so we want to calculate my dividends paid. We did our taxation paid here. We need dividends paid. Okay, so with dividends paid, it becomes a bit easy. With dividends paid, if you want to know your dividends paid, there is a very short way of calculating your dividends paid. You simply say last year's final dividends. And last year's final dividends is how much? Last year's final is 115,300. That is last year's final. This one here. All right. And then you would look for the interim dividends. But that would be very far. Because if you look at this bullet here, they tell us that dividends paid as for the cash flow is 277,300. So that will make it very easy already. So you'll be coming here. I know I have my brackets in already. That is 277,300. that is my dividends paid. If we were given this year's interim, then we would have put that interim here, and then it would have given us our 277,300. This is the one that you've always been doing in class. Last year's final dividends plus this year's interim dividends, which you bring here, then the total will give you the 277,300. We still okay? Okay, so if we're good, maybe we can move on to the next calculation in that case. Okay, now, once you have all your four aspects, remember I said under your O, how many things you're going to get? 4. You have your cash generated from operations, you have your interest paid, you have your taxation paid, and you have your dividends paid. So these 3 are going to be outflows. So let's see how we can get that one there, up there now. Okay, so let's have our calculator. It will be 1,685,500. 1,685,500 minus 91,500, which is this one here. Then I say minus again 518,800. 518,800. Yes, this time I remember that 800. 518,800. And then we also say minus again, minus 277,300. Minus the 277,300. That is now going to give us 797,900. So I bring it here. 797,900. 797,900. 797,900. That is what becomes our cash flow from operating activities, our cash effects from operating activities. So now we have the O, we move on to the I. Let's come on to the I. So this is how it looks when it is neatly written. Okay, so remember, these are supposed to be added to get to that figure over there. Let's go on to the next part of the cash flow statement now, which is your investing activities. Your investing activities. Okay, so under our investing activities, we have 3 things that we're going to talk about. If a company is to invest, the company will invest in 2 aspects. 2 aspects. Number 1, it is your fixed assets. The company would invest in fixed assets. All right, and then as well as your fixed deposits. It will invest in fixed assets as well as fixed deposits. That is what a company would invest in. Fixed assets and fixed deposit. Your fixed assets is going to have 2 sides. Remember, we spoke about that one when I took you through the format. But for it to be easy, let's quickly do a calculation. So I open a T account for this. I open a simple T account and we call it a fixed asset account at carrying value. So this is my fixed asset account at carrying value. This is my fixed asset account at carrying value. When it's a fixed asset, I know it increases on the debit side. Okay, and it decreases on the credit side. It's an asset account. Okay, so I'm going to come in, I'm going to say balance brought down. What were my fixed assets at carrying value in 2022? Okay, it was 2,780,000. 2,780,000. That was my balance brought down there. And then we come here, double lines. And then we now say, what is my balance at the end? So my balance brought down would be 2,981,000. 2,981,000 over there, which therefore becomes balance carry down, which is my 2,981,000. 2,981,000. Now, the next thing that I'm going to bring is my depreciation. What is my depreciation for the year? Because remember, this is at carrying value. So I must do subtract depreciation. So I'm going to come here, I'm going to say my depreciation is 214,000, like that. Then I subtract my depreciation. There you go, 214,000. After my depreciation, I'm going to come and I'm going to subtract my disposal. What was the disposal at carrying value? What was the carrying value of the asset that we disposed? We are going to take a quick break. Let's go for a 2-minute break, and I'm going to see you shortly. I'll see you in 2-minute time.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasininganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, dear learners, from the short break. Remember what we were doing? We had opened a fixed asset account at carrying value, where we had our balance on the debit side, the 2,780,000, and we also had another closing balance here, 2,981,000, which we brought up here as balance carry down, 2,981,000. And we have recorded our depreciation, which was given here, 214,000. We bring depreciation because we are calculating our fixed assets at carrying value. So we have to subtract the depreciation for this year, because these are carrying values at the beginning. And then we have disposals. Did we sell any asset during the year? And you can see here they said they sold equipment at carrying value for 860,000. That means I'm going to come here and I'm going to say disposal, that's 860,000. Then the last one is going to be my bank, when we have acquired a fixed asset. So calculators, let them be ready now. We're now going to say your 214,000, that is the amount that you have now, because you can see in this ledger account that the credit side is bigger than the debit side. We're actually looking for that bank amount on the debit side. So we're just going to add everything on the credit side. So I begin with my 214,000, which is my depreciation. Then I'm going to say plus. We're simply closing off a ledger account in this case. Plus 860,000, which is the disposal, 860. Then I'm going to say plus your 2,981,000, 2,981,000, like that. And that is going to give me 4,055,000. So I'm going to come here and I'm going to say 4,055,000, like that. So it is 4,055,000, like that. From that 4,055,000, I know that we have to subtract the 2,780,000 to get the bank now. That is the assets that we have acquired. 4,055,000 minus the 2,780,000. Minus the 2,780,000. That will give me 1,275,000. So I come here, I get my 1,275,000. That is the fixed assets that we have purchased. So I'm going to come here and I'm going to say, my fixed assets purchased are 1,275,000. All right. How do I get to that figure? I can show my calculation here. And it's very easy to show the calculation. I'll simply do as I did on the calculator. I'll simply say 214,000. Then I'll say plus 860,000. Then I'll say plus 2,981,000, 2,981,000. Then I'll say minus. Then I subtract the 2,780,000 minus 2,780,000. I close my bracket, and that will give me my fixed assets purchased. Remember, it's a cash outflow, which is my 1,275,000, like that. Fixed assets purchased. Then the next one is proceeds from sale. And my proceeds from sale, it is this disposal amount here. So I'm going to say proceeds from sale. I'm going to come here. It's going to be 860,000, like that. Proceeds from sale of fixed assets, 860,000. So now we have done the fixed assets in the investing activities. We are left now with one more thing. It's very important, dear learners, that you know how to do this tier account. I know others use the 5-finger method, where you draw an extract of your note number 3, where you have your carrying value at the beginning, you have your additions, you have your depreciation, you have your disposal carrying value, then you have your carrying value at the end. In the next session, I hope to do that. And I think our next session will be on the 25th of April. So make sure to make a date, put a reminder on your cell phone to remind you of our next session on the 25th of April. I hope to do that one when time permits. Okay, so I'm going to go on to the next part then. And the next part that we are going to look at, so remember, this is what we have done. And then we would see if we have any fixed deposits. If there are no fixed deposits, therefore it means we just close this part. And then we close that part. So if there are no fixed deposit, so we are simply saying your 1,275,000, remember it's a negative. So, and then plus 860. On your calculator, it would appear like this. All right. It's going to be a negative. It's a negative 1 million. It's a negative 1,275,000. And then you are adding 860. Then you say plus 860,000. Plus 860,000. That is going to give us a negative 415,000. A negative 415,000, like that. Okay. And then you would therefore see that we've completed this part of the cash flow. Okay, so let's see now. We have done 2 parts of the cash flow statement. So far, we've done the cash flow from operating activities, and we have our 797,900 in inflow. And we have done the cash flow from investing activities, and we have 415, that is 415,000. That is a cash outflow. You see, it's a cash outflow because it has brackets on it. Okay, so we're going to go to the last part of the cash flow statement now, which has to do with financing activities. And I have indicated when I did the format with you that there are 2 different types of finance that a company can get. Own finance through shares, borrowed finance through loans. Own finance, issuing shares. Borrowed finance through the acquisition of loans. So let's look here now. What do we have? We're given information from the extract of the statement of financial position, and we also have share information. Let's see what we can do here. If we had to calculate the proceeds from issue of shares and the shares repurchased, it would be very easy if we can open an ordinary share capital note. That is my ordinary share capital note. This is note number 7. Okay, this is my ordinary share capital note, note number 7. In this note, let's see, at the beginning in 2022, I have a balance of 6.4 million, which is what you see here, 6.4 million. So I bring that one there. The one at the beginning here, I simply bring it here at the beginning, 6.4 million. And then the 2023, that's the closing balance. The 2023, that's the closing balance. So I bring it here to be 7,395,000. 7,395,000. 7,395,000, like that. 7,395,000. And then I come here. I now need the number of shares. On 1 March is the beginning of the year. 1 March 2022, when the year began, we had 800,000 shares in issue. So I'll come in, then I'll say 800,000. These are ordinary shares. Ordinary shares. Okay? And we don't know what was their average price, but we can calculate it. If you say 6.4 divided by 800,000, you can do that. It's very easy. You simply say your 6.4 million here, and then you can divide that by your 800,000, which is that one there. And then you get your 8 rand. So the average price here at the beginning was 8 rand. 8 rand. Let's go. Additional shares were issued at 12.50. So we don't know the number of shares, but we know that they were issued at 12.50. They were issued at 12.50. How many shares? We are not told. We're just told additional shares. Okay? Don't fight. You continue going. You continue going. And then we are told 30,000 shares were repurchased. Once I hear the word repurchase, I come here, I open bracket. Once I hear the word repurchase, I come here, I open bracket. And I come here and I say 30,000, okay, repurchased. And I'm told it is at 36,000 above the average. So I know you know the triangle. On the triangle, we have the retained income. And on that retained income, we're talking note number 8. That is where we record the amount above, which is my 36,000. The amount above, which is my 36,000, I bring it here. But I can also get the amount per share. If I say my 36,000 divided by 30,000 shares, I can know what I paid above per share. 36,000 divided by 30,000. That is going to give me the above per share is 1 rand 20. That is per share now. Okay, 36 in total, per share 1 rand 20. And then here we don't get the amount that we use, because here we need the average price that we're going to use here, and we don't have that one, so we can't get that amount in brackets as well. And then we're told on 28 February, this is the last day of the financial year, we had 870,000 shares. So I'll come here, then I'll say 870,000 shares. In accounting, you don't have to fight with it. Allow what is coming, allow what is given to be there. Then you simply record whatever is given and you flow in with it. So this is at the end. And I would then say, I want to get this number of shares here. Can I get that? Yes, I simply do the bottom up approach. Let's see if I can do the bottom up. I start with 870,000. 870,000 there. Then I'm going to say plus 30,000. Okay? Then I'm going to say minus 800,000. That one at the beginning. Minus 800,000. And that is going to give me 100,000. It means here we have issued 100,000 shares. And those 100,000 shares, we issued them at 12 rand 50. So it is 100,000 shares that have been issued at 12 rand 50. Issued at 12 rand 50. That will give us 1,250,000. So I come here, it becomes 1,250,000 there. So when I come in, I'll say proceeds from shares issued. I'll now say we issued 1,100,000, Mr. Simbi, 100,000. We issued 100,000 and we issued them at 12 rand 50. We issued them at 12 rand 50. That means we have received 1,250,000 like that. That is what it means. Now, let's come to the repurchase. So this one becomes very easy then. We simply do again the bottom up. Let's start with our 7,395,000 from the bottom. From the bottom. So I get my 7,395,000. 7,395,000. Then I'm going to say I'm going up. So I'm going to subtract the 1,250,000 minus 1,250,000. Minus 1,250,000. I subtract it. Then I go again and say minus 6.4 million. I subtract it again. 6.4 million. And that is going to give me 255,000. So it means here it is 255,000 that I have there. So when I come back to the triangle, I'll now say, here is my ordinary share capital amount. Note number 7. And in my ordinary share capital, I have the rand amount, which is 255,000. So if I take my 36, I add it to my ordinary share capital amount, I should get my cash flow amount here. So I'm saying 36,000 plus 255. So I'm coming here, I'm saying 36,000. There, 36, Mr. Simon, 360, 36,000 plus 255,000. That is going to give me 291,000. So here I get 291,000 over there. So I can come here and I'll open my bracket and then I'll say 36,000. And then I'll say plus 255,000. And that is going to give me shares repurchased in brackets. I'm going to get my 291,000. 291,000. Now, I want you to check the following now. There could be another way of doing this, because if I repurchased 255,000 and it's 30,000 in my ordinary share capital, that can allow me to calculate the average price that we paid per share. The average price that we paid per share. How do I do that? I'm simply saying 255,000 and I'm going to divide that by 30,000. I'm going to remain with 8.50. So here, per share, it's 8.50 per share. The average price per share, 8.50. 1.20 plus 8.50. I'm going to come up here now and I'm going to say per share, how much is that going to be? If I say my 8.50 plus my 1.50 plus 1.20 rather, 1.20, which is the one we get here. That is going to give me my 9.70. So I come here, it's 9.70. So I can come and say, we repurchased shares here. How many shares did we buy back? 30,000 shares. How much did we pay per share? 9.70. So if it's 30,000 shares that we have bought back at 9.70 per share, that should give me the same amount, 291,000, like that, 291,000. This is how you can also do it. So remember, I've showed you two ways. Whenever you have an ordinary share capital note given to you, do not fight with the figures. If there seems to be some missing amounts, just continue going and calculate whatever it is that you're given, and the missing amounts will come out when they're on. Either the bottom-up approach, or you can calculate an average price and you can still get that amount. So in this case, we had proceeds from issue of shares, cash inflow, and we have the shares repurchased, cash outflow. On the shares repurchased, very key to remember, we are adding the ordinary share capital amount together with the retained income amount. Ordinary share capital amount together with the retained income amount. 36 plus 255, 291. 120 plus 8.50, 9.70. That is what we use in the cash flow statement. Okay, let us now go to the last part. And the last part has to do with the loans. Remember, I spoke about two different types of finances: own finance, shares, borrowed finance, loans. So we have to look at the loans and see, did the loans increase or decrease? An increase in loans means we have received a loan. A decrease means we've paid back a loan. 2022, 2023, 930 and 1.1. What do we see here? It is an increase in loan. So if it is an increase in loan, that means we have received a loan, cash inflow. So I'm coming here, I'm saying 1.1 million minus 930,000. When it is a liability, loan which is a liability, there's an easy way to ascertain whether it's cash inflow or outflow. You simply say current minus previous. Current year, 1,100,000. Previous year, 930. So we come here, then we say 1.1 million minus 930,000, like that. And then that will give you your 170,000. You can see on my calculator, it's a positive 170, an inflow. So I'll come here, then it's 170,000, like that. Cash inflow, 170,000, cash inflow. And then we can conclude where we use our calculator. It is your 1,250,000, which is from the issue of shares, 1,250,000. Then you subtract 291,000, remember, on the repurchase of shares. And then you add your 170,000, which is the increase in loan. And then we end up with 1,129,000. That is how we get this figure here, 1,129,000. So we can come, and this is the cash flow statement now. And we can get the net change in cash and cash equivalents. To get that, have your calculator ready. Have your calculator ready. We are going to say our cash flow from operating activities, 797,900, minus the 415 plus the 1,129,000. Let's do it together. It's going to be 797,900 minus 415,000 plus 1,129,000. And then it gives you the final amount, which is 1,511,900. 1,511,900. 1,511,900. And that becomes your answer here. But remember, you have to do the cash and cash equivalents at the beginning and cash equivalents at the end. And to do that, I have a special activity that I want to do with you, which is activity number 2, which is an extract from the Eastern Cape Prelim for the year 2023. Let's do this one together and see how far we can go. So, it is very important that you understand this part, because examiners can test you on the cash flow. They can test you on the entire cash flow, is this, or they can test you only on this part, or only on this part, or only on this part. So you can be tested on this alone, or that and this, or you can be tested on this, and in other words, you can be tested on the entire cash flow. You have to know the entire cash flow, and the examiner can test you again on different parts of the cash flow statement. You must be ready to do any part of the cash flow. But the interesting part that I want to do with you now on activity number 2 is the cash and cash equivalents part, okay? The net change in cash and cash equivalents. Remember, this is how the answer book would look like. Net change in cash and cash equivalents. Then if cash and cash equivalents at the beginning and cash equivalents at the end. Let's begin. I cannot get this one. This is what I'm trying to calculate. The net change in cash equivalents. Then I have cash equivalents at the beginning, which is in 2022. So I'm going to come and I'm going to open my bracket. And I'm going to say, my cash equivalents is 6.5 million. 6.5 million there. But I know this is an asset, so you can see it's a plus here. But I have a bank overdraft. The bank overdraft must be subtracted. So I'm going to come here and I'm going to say minus. Minus, how much is the bank overdraft? 38,400. So I'm going to come here and say minus 38,400. So the bank overdraft must be subtracted. All right. Then I'm going to come here. Let's see on the calculator. 6,500 minus 38.4. Oh, you left the 3, Mr. Simbi. 38.4. Okay. Equals So the bank overdraft must always be subtracted. It always has to be subtracted. Then I'm going to come here and I'm going to say it's a negative 31.9. It's a negative 31,900, like that. Let's come to cash and cash equivalents in 2023. And then I'll come here and I'll say it is 56,600 minus. How much is my bank overdraft in that year? 0. I always encourage you to always subtract the bank overdraft. Okay, so you have to know that in this part, you always have to open a bracket. Always open a bracket. In this case, I opened the bracket. I found that the bank overdraft is 0. It's fine. So that means I'll come here. I'll still get my what? 56,600. 56,600. I always have to open the bracket. Now, I want to calculate going up now. Let's see. If I'm to go up, I'm starting from the bottom, remember. And at the bottom is 56.6. 56.6. Then I'm going to say minus 31,900. Minus 31,900. I'm going up. So do I say minus 31.9? No. If I say minus 31.9, it's going to give you a figure like that. And I want to prove to you why it is wrong. You're going to end up with 24,700. You're going to get 24.7 here. And you can't prove that 24.7 going down. So if you want to go down, you say 24.7, and then you come, you say minus 31.9. Is it going to give you 56? It won't give you 56.6. So you can't do that. Let me show you what you have to do. So let's come here. Let's take that amount out here. Let's take that amount out. Let's see how we have to do that one the right way. How do we do that one? Remember, bottom up. Whenever, that's what we've been doing the entire day. Whenever you are going up, you change the sign. So it has to be 56.6. You change the 31,900, a negative, to a positive now. So you have to go and say plus 31.9. Plus 31.9. That is going to give you 88.5. So I come here, it becomes 88,500. 88.5. Let's see if we can prove that 88.5. So 88.5 minus, because it's a negative 31.9, minus 31.9. That is going to give us 56.6. So that is correct. So when you go up, the bottom amount remains the same. But the second amount here, you change its sign. You flip its sign. If it's a negative, it becomes a positive. If it's a positive, you make it a negative. So that when you come down, you get the same effect again. So this is what normally is tested. So the examiner can test you with the bank overdraft at the beginning, or they can test you at the end. You just have to know, when I'm doing cash and cash equivalents, I must always open my brackets. Dear learners, we're going to take a 5-minute break, and I'll see you after 5 minutes. Welcome back, dear learners. Welcome back from the ad break. So we are going to continue with our session. We are going to look now at activity number 3. And in activity number 3, I'm going to be looking at financial indicators. Whenever you're doing financial indicators, it is very important that you know your formula sheet. Know your formula sheet. And our formula sheet is split into different segments. We have what we call profitability financial indicators. These are financial indicators that looks at the business's profitability. All right. And then we also have, as you can see here, our solvency financial indicator. And we have the solvency ratio. It is your total assets as to total liabilities. It looks at the ability of a company to pay off its total liabilities using its total asset. And therefore, we can determine if a company is solvent or not. And we have the liquidity financial indicators, the ability of a company to pay off its short-term obligations. Can a company be able to pay its short-term debts? And to do that, you have your current ratio, your acid test ratio, stock turnover rate, stock holding period, average debtors, as well as your average creditors payment period. And then we also have our ROTCE. This is the longest one. You see when I show you the entire formula sheet. Our return ratios, when we deal with our return ratios, there is a number of them. And the first one is your share. You have your ROTCE, which is the return on total capital employed. That's the longest one that I was talking about. And then you have your earnings per share, which is an EPS. Remember, these are all part of your return financial indicators. These are part of your return financial indicators. And you also have your dividends per share, DPS. And you have your net asset value per share, NAV. You have your dividend payout rate. It simply says, when we look at the dividends that were paid, what percent of earnings were actually paid as dividends, dividend payout rate. I'm going to do it with you as we go. And then you have your risk and gearing financial indicators. That is looking at the debt equity ratio. We are looking at risk and gearing. Okay. Now, it is very important to know the formula sheet, as I've said, and you need to know where to find which financial indicator. Where exactly are you going to find a specific financial indicator? In this case, you will see the top part, you have your probability financial indicators. And then after that, you have your solvency financial indicator here, which is your total assets as to total liabilities. All right. And this one here, it is your current ratio, liquidity, current assets as to current liabilities. And just beneath it is your debt equity, which is your non-current liabilities as to shareholders' equity. So I'm trying to give you their names because when you look at the formula sheet, it does not have names. It just has the formulas. How do you know the formula? You need to know the formula and the name so that when it's asked in the exam, you can say, if they want the debt equity, this is where I can find it. But I encourage you to know your financial indicators formula by heart. By heart, that is on your fingertips. I encourage you to know these financial indicators by heart. And then you also have your asset test ratio over here. So you have your current assets minus inventories as to current liabilities. And remember, the shortest way, because here you're saying it is a note number 4 plus note number 5 plus note number 6 minus note number 4 as to your current liabilities, which is the same as simply saying note number 5 plus note number 6 as to your current liabilities. So you find it up there and down here, one and the same thing. And then these financial indicators here can be tested in both paper 1 and paper 2. All right. So you have your average trading stock over cost of sales. All right. And then you have to know their names here, and they get tested in both papers, paper 1 and paper 2. And these are your liquidity financial indicators. Now, it is very important that when you look at these financial indicators, you have to know that at times the examiner will ask you to use only the closing stock. All right. So don't assume that you are being asked to calculate average stock, read the question properly. All right, because at times they can say calculate the stock holding period using the closing stock, and you don't have to use the average in that particular case because the examiner would have said using the closing stock. So you need to read the question. Don't always assume. Read every word and understand what the examiner wants. And then this is the last part of the financial indicators. And then the longest one, remember, the longest one is your ROTCE. Okay? And then you have your return financial indicators there. And then this is your break-even calculation. And you do this when you do your cost accounting, that is for paper 2. It is important to note these aspects here, but they will make sense when I explain them when we do certain calculations. Now let us go to activity 3. And activity 3 is extracted from the Gauteng prelim for the year 2023. Let us begin. So it is important, once again, to have your calculator, have somewhere to write, so that when we do these calculations, we do it together. The first calculation that we're going to do is to calculate the percentage net profit before tax on sales. The percentage net profit before tax on sales. What are we given? We're given the sales, fine. We're given income tax and net profit after tax. Yet here it must be net profit before tax. So now we need to get the net profit before tax. Okay, so very, very key here. Within the question here is the answer, because it is your net profit before tax. So the formula would be my net profit before tax over my sales. I multiply that by 100 over 1. So I'm going to come here and I have net profit after tax. You have to remember what we did in the statement of comprehensive income. You always get your net profit before tax. Okay? And then you have income tax, which is subtracted. And that income tax is 358,440 subtracted. This is in the statement of comprehensive income. Then you end up with your net profit after tax. After tax, which in this case is going to be 836,360. Now, we want to get that one, the net profit before tax. I have already taught you the bottom up approach now. So in order for you to get your net profit before tax, you are simply saying the 836,360. You have to add that one. You have to add that one. So you're going to say 836,360. Then you're going to add the 358,440. 358,440. And that is going to give you 1,194,800. 1,194,800. That becomes your net profit before tax. So when I come here, my net profit before tax is 1,194,800, like that. And then I divide that now. That is my net profit before tax. I divide that now by my sales, which is given here, which is my 8,240,000. 8,240,000. I multiply all of this by 100 over 1. So I'm going to come here. Let's bring the adding machine somewhere to the center. I'm going to say now, let's clear the calculator so that we see nicely. We're going to say 1,194,800. 1,194,800. We divide that by 8,240,000. 8,240,000. And then we multiply that by 100 over 1. Multiply by 100 over 1. Let's see what it's going to give us. It is going to give us 14.5 14.5%. So I'm going to come here, and my answer is 14.5%. 14.5%. That is my answer over there. All right. We still together? Okay. So this one was easy because within the question is the formula. Okay. Within the question is the formula. Net profit is on sales. The cup is on the table. The cup is on the table. So that means the cup is on top of the table. So that means my net profit before tax is on top of sales. That's what it simply means. Okay, let's go on to the next one. The next one is going to be my current ratio. My current ratio. My current ratio. And to get the current ratio, remember, it is your current assets. It is your current assets as to current liabilities. So it is your current assets as to your current liabilities. Okay, so let's go. How much is my current assets? My current assets is 1,430,000. So I'm coming here, it's 1,430,000. As to my current liabilities, 650,000. As to 650,000 over there. My answer has to be S to 1. My answer must be S to 1. That means I must divide everything now by 650. If I divide that by 650, it gives me 1 here. And then I come here, I divide that by 650 again. Then I need to know how much it gives me. Let's bring our friend here. So it's 1,430,000. 1,430,000. We're dividing that by 650,000. 1,430,000 divided by 650,000. And that is going to give us 2.2. So I come here, it becomes 2.2. The answer becomes 2.2 S to 1. Yeah, 2.2 S to 1. That is my answer there. When you are doing a financial indicator with the SENEM ratio, your answer has to be S to 1. Once you see ratio, current ratio, as a test ratio, your answer has to be S to 1. So you always have to divide by what is on the right-hand side here. By what is, so that you end up with a 1 here. We're good. Okay, let's go on to the next one. The next one then becomes my dividend per share. DPS, dividend per share. Okay, you will find that in the formula sheet, you will be told it is your ordinary share dividends, over the number of shares. All right, and then multiply by 100 cents. That is very correct. But that only applies when the number of shares does not change. When the number of shares does not change. If the number of shares changes during the year, you can't use that same formula because you would have given interim dividends to a different number of shares and you would have given final dividends to a different number of shares. Okay, first, for it to make sense, let's do the thing that I consider wrong, then I show you why it is wrong, then I show you the right thing. Okay, because if I just speak it like that, you may not understand what exactly I'm saying. First, let's do it that way. When I talk about my ordinary share dividends, I'm simply talking about my what? My interim and my final dividends. All right. So if I'm to get my interim and final dividends, we are told that the end of the financial year, there were 3.2 million shares and interim dividend was paid of 5 cents. So let's say here, my interim plus my final. My interim interim dividend of 5 cents is paid on 30 September. Okay, and then we would then say if the interim dividend is paid on 30 September, they don't tell us how much it is. All right, remember I said I want to show you what some of you do, and then I can show you why it is not right. And then they say a final dividend was declared, including the shares repurchased. Total dividends paid and declared amount to 490. Total dividends paid and declared amount to 490. So that is your ordinary share dividends. Remember, your final dividends is what? Your final dividends is 315,000. And your interim dividends, you would simply say 315. Remember, you have to come to 490. You have to come back again to total dividend. You have to come back not to 490. 490 is what was paid. So you now say the paid is last year's final, the 490. The 490 is last year's final and this year's interim. That is the paid. Last year's final and this year's interim. So last year's final, we have it. How much is that? Last year's final is 65. Last year's final is 65,000 there. So if we say all of that, and then we get 390 here, 390. How much is this year's interim? So you would say your 390, you say your 390,000 minus 65, which is your last year's final, 65. That will give you 325,000. Okay, so you get 325,000 there. I just want to show you something. Okay, so you get 325,000 there. That is this year's interim. All right, that gives you this year's interim, 325. And then you would then say the final dividends plus the 325,000 here. If you add that, that is what gives you your ordinary share dividends, interim for the year and final dividends for the year, the ones that appear in note number 8. So if you say 325 plus 315, okay, and then you get your 640 here. You get 640,000 there. And then you divide it by the number of shares. Okay, and then they say on 28, it was 3.2 million here. 3.2 million here. You multiply by 100 cents. This is what we want to see. 640,000 divided by 3.2. Okay, 3.2. And then that will give you 20 cents. You end up here with, let's see again, 0.2. So 0.2, remember, you multiply by 100. Multiply by 100, then you get your 20 cents. So here it gives you 20 cents. This is not correct. That is not correct. Because you have taken this as interim, you have taken this as final, which makes your ordinary share dividends. And you divide it by the number of shares at the end, which is 320. And it gives you 20 cents. That will not be correct. Why? Because you will see that here they were told that 300,000 shares were repurchased. So once the number of shares change, we have to take that into consideration as we calculate our dividend per share. And then in that case, we have to do it a bit different. We have to calculate our interim separately. So we have to say, how much is our interim dividend per share? How much is our interim dividend per share? And our interim dividend per share is given as 5 cents. It was given there, 5 cents. Then what we now need is the final dividend per share. Okay, so how much is the final now? We are told now a final dividend was declared to all shareholders. All right, that should not be a problem because you have the shareholders for dividends. That's the final dividend, this one. So you can take your 3 115,000 over there. And then you divide it now. You divide it by what? We are told that a final dividend was declared to all shareholders on 28 February, including the repurchased shares. That is the 300,000 shares. But on 28 February, at the end of the financial year, there were 3.2 million shares in issue. That simply means before the repurchase, there were not 3.2. So we have to say 3.2 million plus the 300,000. That gives you 3.5 million. Then we take the 3.5 million. That is the number of shares that we declared the final dividend to. That is all shares, including the repurchase shares. Because once you take out the repurchase shares, which is your 300,000, that is how it brings you back now to the 3.2 million. So we're going to give our final dividends to the 3.5 million shares. So I come here, then I say the 315,000 divided by 3.5 million. Then I multiply by 100 cents here. So let's come and see again. So I'm now saying my 315,000, I divide that by 3.5 million, like that. And that will give me 0.09. So remember, we multiply by 100. It will give me 9 cents now. 9 cents. So I'll now say 5 cents plus 9 cents. That is going to give me 14 cents. That becomes my dividend per share. That becomes my dividend per share. If I just take my ordinary share dividends and say my interim amount plus my final amount, and I divide it by the number of shares, it will not give me a true reflection because the number of shares have changed. When I gave my interim dividend, there was a certain number of shares. When I give my final dividend, there's also a certain number of shares. So it would have changed. So I can't use the same amount. Are we together? And then you're going to see again, I'm going to try and do another one. So it is advisable, once you see that change, quickly calculate it per share. And in this question, we're already given the 5 cents for the interim, which is this one here. So it would make it easy just to come and calculate the final dividend per share, which is 9 cents. Then you end up in total with 14 cents. Can I go? Okay, let's quickly go now to the last one. The percentage return on shareholders' equity. So now we are on a return ratio. Percentage return on shareholders' equity. So remember, percentage return, once we talk about return, financial indicators, it is your net profit after tax. That is what we consider. So I'm going to take my net profit after tax, which is 836,360. My net profit after tax, and then I'm going to divide it now by my average shareholders' equity. By my average shareholders' equity, I'm going to take the 2022 shareholders' equity, which is my 10,312,350. Then I'm going to say plus my 13,941,500. I add these and then I divide by 2. Remember, I need average. Then I multiply by 100 over 1. It's a percentage return. And then some would want to simplify this. Let's simplify this. In other words, let's get the average there. To get the average, I'm simply saying my 10,312,350. 10,312,350 plus 13,941,500. All right. And then you divide by 2. Then that will give you 12,126,925. So I'll come here, then I'll say the same amount here. It is my 836,360. And then I divide that by my 12,126,500. 925. You multiply by 100 over 1. Okay, so let's see if we come here. It's going to be my 836, 360. 836, 360. I'm going to divide that by my 12 million, 126, 925. 12 million, 126, 925. Okay, and then remember, it is a percentage. Let's multiply by 100. That's going to give me 6.89. So I'm going to round it off to 6.9%. 6.9%. That becomes my percentage return on shareholders' equity. Percentage return on shareholders' equity. Dear learners, let's quickly take a 2-minute break and I'll see you after 2 minutes. Welcome back, dear learners, from that short break. We're going to do our last activity, which is activity number 4 now. And this is an extract from the Limpopo Prelim for the year 2023. And in here, I want to emphasize again the aspect of dividends per share that we just did. Maybe you're saying, Mr. Simbi, the first time I did not get you. So this time, I'm not going to do the wrong way because you already know that is not the right way. So let's just quickly go on to the right way of doing things. Okay, so how do I calculate my dividend per share? In this case, I can see that I have 800,000 shares in issue. There are additional shares that were issued. And then there were shares repurchased. So already that tells me that there's been a movement in the number of shares. So I can't divide everything by 870,000 shares because there has been movement in the number of shares. So that means I need to calculate my interim separately. So I'm going to say here, my interim, I'm going to calculate it separately. And I'm going to calculate my final separately as well. Okay, so let's come and calculate these figures. To get my interim dividend, I am told that interim dividends were paid on 30 September. And then dividends paid as per cash flow. Dividends paid as per cash flow. So once we look at dividends paid, when we look at dividends paid, we know that dividends paid is last year's final plus this year's interim. And in total, we are told the dividends paid as per the cash flow is 277,300. So it's 277,300 dividends paid. And which of the figures can we get here? We know already that we have last year's final. Last year's final is 115,300. Last year's final. So I can get this year's interim. How do I do that? I simply come here, then I'll say 277,300 minus 115,300. That is going to give me 162,000. 162,000. That is this year's interim. So I want to know what is my interim dividend per share. So I'll take the 162. I'll take the 162,000 like that. And then I divide it now by the number of shares. How many shares did I have when I declared this interim dividend? When was it declared? Interim were paid on 30 September. So the interim were paid on 30 September. That means we have the March, we added, you see with me? And then because September comes after June. So I have to know how many shares were issued additionally. That is not a problem. If you can see that already here we have some sort of a note number 7. We can do the bottom up calculation right from this note, right from this information. We simply start with our 870 at the bottom. 870, we're going up. So we're going to say 870. These are repurchased shares. Once they are repurchased, they're in brackets. So I'm going to say 870 plus 30. 870 plus 30 minus 800. Minus 800. So it's 870 plus 30 minus 800. Like that. And then that will give me number of shares. Okay, that we issued. So we issued 100,000. This is the additional shares here. We issued 100,000 shares there. That is the shares we issued. So if we had 800 at the beginning and we issued 100, when we paid the interim, how many were we having? 800 plus 100, we had 900,000 shares here. Okay, we multiply by 100 over 1. So let's see, what was the interim dividend per share then? I would say 162,000 rands. I divide that by 900,000. That is going to give me 18 cents. So I come here, then I get 18 cents. I get 18 cents here. So my interim is 18 cents. My interim is 18 cents. Then I have to add my final now. I have to add my final. Okay, then they say a final dividend of 22 cents per share was declared. So I simply come and say 18 plus 22. And then that will give me 40 cents. 18 plus 22, that will give me 40 cents. Then that is it. 40 cents over there. So very, very easy. You see how I did it. If you had taken the entire dividends and then you want to divide by the 730,000 shares, that was not going to be correct because the interim dividend was given to a different number of shares and the final dividend was given to a different number of shares. So once you have this change in the number of shares, you must calculate the interim separately and the final separately. This is what we did in today's class. We did the cash flow statement and some calculations, and we also did financial indicators calculation. In the next lesson, which is going to be on the 25th of April, this very same year, we're going to meet again at 2:30 up until 4 o'clock. I'm going to be focusing on analysis, and interpretation of financial information. I hope to make a date with you until our next lesson. Enjoy your studies and be safe.